Okay, I think we're good. Hey Zoe. Um, so again, what we'll do here today is we'll look through some markets. We will apply our rule-based strategy that quantifies supply and demand in any and all markets, meaning we're looking for market turns and market moves in advance with a very high degree of accuracy. We'll follow our rules to do that. For anyone new to the strategy, you can go back and look at some of the webinars. The strategy's been around since my days on the trading floor, so it was over 20 years ago. Anyway, what we're focused on simply is where banks are buying and selling in the markets, so we can buy and sell there also. If you have any markets you want to look at, just let me know. If not, I have a whole list to go through myself. Okay. The CME launches the Bitcoin futures today, so you would just go, the way that you trade anything else. I would just be very careful. It's the first day of trading, so and as we've seen from other exchanges that trade Bitcoin, it's very illiquid. So just be careful with that, and we'll get there. All right, let's start with our most important market, the chart of the dollar, right? This is our most important market that we're going to look at. We always look at. And for those that have been with us for years, I mean, here's all the levels from the past that we've used, and almost always they work out as planned. And that's because we're looking at larger time frame supply and demand setups, daily, weekly. Okay. All right. So as we can see with the dollar, whoops, I should have left that up. There we go. So as you can see with the dollar, we have, okay, we've been sitting in this level here, which I would say, we could probably get rid of that. It's not really an area to be concerned with anymore. But the level above is key. So there's much more risk to the dollar going down than going up from here. And even, and eventually, even if it gets through this level, you have another quality level sitting just above it, and another one above that. When you look below, there is plenty of room and a nice profit zone opened up for the dollar to make a move towards 90, right? So why is this important? Because almost every other market we're going to trade and look at is going to, move. The dollar, these dollar levels that we're looking at are going to have a big impact in those movements. Make sense? So let me let's go look at some of those. And if you have, favorite markets that you want to look at again, related to the dollar, not related to the dollar, just let me know. I'm having trouble figuring out where to put this chat box. Kind of keeps getting in the way. Let's just put it down here for a minute. Or maybe here. All right. So why don't we start with the euro, since we have the euro up. Obviously, we don't want to, with the dollar inside of this multi-day range, okay, the odds are not stacked in our favor either way. Remember, when prices are inside a range, that's not quality trading opportunity, right? Our key supply and demand levels are above and below the range. So we're not going to spend too much time on the euro, because when we do that, move this. Whoops, sorry about that. Move this chat box again. Here's what the euro looks like. So sorry about that. So there's good levels above. There's good levels below, and but we're just stuck in this range. So I wouldn't do a whole lot with this. If anything, you look for some short-term day trading opportunities. We have those when we go down to some smaller time frames. Okay. All right. Let's Let's move the chat box again. And we have a little level down here that we'll look at on the more active trading side of things. We're looking at the spot euro right now. And again, with the supply zones in the dollar, we have to look for this euro. Look at this euro demand for a move higher in price. Make sense? Okay. So there's room to the upside. This is not an area to be concerned with. I know some of you may look at this as supply. It's not. Well, it's certainly not fresh supply. So prices can go higher, but we have two demand zones below that we can look to buy against. Sure, we can bring up the 4-hour chart of the British pound. So let's do that. And let's bring this chart right here. Give me 1 second. Four-hour chart of the pound. So I think what you're looking at is this area right here. So prices can turn lower from that, but that's not a fresh supply zone for us. Okay. Let's go down to a smaller time frame. Okay. So now we get down to this one. So it's a good area to look at, no question. But let's go down one more time frame. Oh, that's already a 30-minute chart. All right. I don't like to do this, but let's just go down one more. So here's the area we're looking at up here. See all that trading activity? That's not what we're looking for. In fact, that's the picture of filled orders, not unfilled orders. And as you know, by watching, going through our sessions, unfilled orders cause prices to turn in markets. Filled orders facilitate price movement. So let's do that. Let's put this level in right here. And then let's get this one in right here. So these are levels inside of this big rally base drop. Okay, so if we're going to look to short anywhere, these are two, and I actually put that a little conservative, maybe a little too conservative. Let's get that level right there. This level right up in here. Okay. Now, the way that we create our zones, it's very rule-based. It's more than we can have time to get into here, but very rule-based. Our proximal lines on the supply side, just like the demand side, are right at the origin of that move in price. We want to know where exactly did, the supply or demand equation, in other words, right here on supply, right? Where did that last buyer buy, and now you had no more buyers and sell orders left over, right? Right up in here. There's the conservative way of doing it, but being conservative typically doesn't help you in trading. Does that make sense? Now, if you're thinking of buying there, you just have to be aware that there's going to be some demand down here. Okay? So make sure you're well aware of that. Okay. So there's a nice couple levels to trade off of, and we'll leave that alone. Let me get to again. There's the little bit more aggressive level. Here's the more conservative level. So right there. Whoops. That's about 134.10. So let's do that. $134.20, and then of course your stop needs to be above that. All right, let's leave that one alone. Again, if you have another market you want to look at, we can do that. That was a fairly small time frame, so let's try to get back to some of the bigger time frames. And as we do that, again, we want to make sure that in the back of your mind, you're well aware that you have this dollar supply above and a nice profit zone below. So markets like this, we're looking for major currencies against the dollar. We're looking for potential buying opportunities, right? Don't really have that in this market, so let's move on to another one. The Aussie dollar is coming out of this. It's playing out exactly as the, opposite the dollar, right? Dollar coming out of supply and falling. Aussie dollar coming out of demand and possibly rallying from here. A nice big profit zone on the upside, on the weekly chart. But as you come down, you'll see there are a couple stopping points. One level that I would definitely keep in mind going into, because we don't talk that often, is this area up here is likely to be reached in the near term. So this is one where we have a level here on top of another level. So ideally, if you can handle the risk, you'd want to combine those two. Very high probability opportunity here, very high. I plan to trade Bitcoin futures soon. I just want to make sure that they're liquid and all that. So I own Bitcoin. So just full disclosure there. Okay. Yeah, again, today's the first day of trading at the CME. So the CBOE started a little over a week ago, I believe. And there's ETFs coming out. But even buying Bitcoin, at least now, is still pretty risky. So you need to be careful. All right, let's keep going. And why don't we get off the currencies for a minute and go to some commodity markets that we would also look to, with that dollar supply above and profit zone below. Right, here's oil, which is reacting as it should, based on what we just said. And if we blow up the larger time frame chart of oil, you'll see that you don't really have any quality supply until about 61.50, which is quite a bit, yeah. 61.50, yeah, right in here. Okay, this is likely where oil is headed. And of course, there's a nice demand zone below. One of the things that will help you determine where prices are going to move to is this down here. Right here. So notice when prices attempted to come down to this level, couldn't even touch it, and started to rally. Okay, that's a sign that you're going higher. We saw that in the Aussie dollar earlier this year. For the past year, price has been barely touching that demand zone and going deep into the supply zone. Same thing here. So we're likely headed up here. Again, the dollar, major dollar levels are suggesting that this will happen also. Okay. That's oil. Let's take a look at copper. There's a demand zone I kind of forgot about. But again, this is reacting, as it should with the dollar. Yeah, there's not a lot of... Oh, let me go over here. Yeah, what I wanted to show you was this supply level sitting just above. Right here. This guy right up in here. All right, so this should be some serious trouble for copper if prices get up there. But again, if the dollar continues to fall off that level, you'll likely see copper come up to here. Okay. And remember, we keep talking about the dollar falling, but there is room. The dollar has room to go up to supply, which would push copper and all these other markets down. So keep an eye on that. Oops, not on that time frame. This one. I thought we just put this level in. Maybe on this chart. There it is. Just to get your prices. There you go. That's about 31,540. Okay. All right. Might be on its way there now. Yeah, we can certainly look at gold. Let's take a look at GC. So gold dipped pretty deep into this demand zone and, is now getting a little bit of a bounce. Okay. Let's see. You're saying gold is close to 204-hour supply. So you do have a little supply zone here. You have another one right here. Let's just take a quick peek at the daily. You'll see those levels there and how we might play this. Yeah, so in the near term, does gold look higher or lower? Well, maybe not so near term. Over the next couple of weeks or so, does gold look higher or lower to you based on what you see on the chart before I put levels in? Higher or lower? I mean, look where price is right now. If you had the opportunity to place a bet that in a month prices will be above or below where they're at now, what would you say? Yeah, yeah. So the dollar is near supply. So it's a tricky one because the dollar is near supply. Look, you don't have, when you come down to the 4-hour chart, for example, and we see on the daily, yeah, you have some supply here, but neither of these are quality supply zones, right? You don't get up to quality supply. So I guess it was kind of a trick question, but you don't get up to, any real quality supply on a larger time frame until gold gets up to here, and that's quite a bit higher. Up in here. That's really the fresh quality supply zone. And the dollar would have to drop quite a bit for that to happen. And look, gold is not likely to just scream through all this. But what's happening here too is if gold goes a little bit higher, we've now created a nice fresh demand zone. Okay. But again, I would go back and say gold is a little bit of the tricky one. Right. So you have, what I'm saying is, this is the picture right here of filled orders. Okay, orders being filled, meaning that should facilitate price moving lower. However, right at the bottom of that, you have a demand zone that's barely been touched. So it looks like the downside in gold is capped to about here in the near term, and the upside is capped to the supply zone that you see on the chart above. Okay. So these are the two areas where the chart is telling us that banks are more than willing to buy and sell gold. Okay. Looks like pretty big commitments in those areas. I see your words there. It's tricky to play at this time. And why is that? Because you're right in the middle of the supply-demand curve. Right? For gold, that is. For gold. All right, let's move on to another market. So let's move on. Why don't we look at where is it? Let's look at natural gas. Uh-oh, did I forget about a level here? No. Oh, we did. Wow, I forgot about natural gas coming all the way back down to these. Yeah, I mean, for those of you who've been with us, we've had these levels in for over a year now. Um, hmm. Maybe we'll come down to this lower one. We haven't hit that one yet. So we probably wouldn't have bought here. But let's see if we come down one time frame. Yeah, so if we can come up to, some of these and move lower, be great to get natural gas, be able to buy natural gas down here at this level. So we're still a little ways off from that. So we'll leave it alone, but be, definitely keep your eye on that one. That should be quite a buy if it gets down there. Let's look at silver. Not that one. Hang on. But as you can see with all these markets, where the trick this morning is we are in most of these markets, because of the dollar, we're in the middle of a move. So there's not a whole lot you want to do when you're in the middle of a move, right? The odds are not stacked in your favor when you're in the middle of a range. You want to take action when price is at or near price levels where supply and demand is out of balance. When that imbalance also has a big profit zone with it. Those are the only times we want to take action. That's just not the case in a lot of these markets right now. Here we're looking at a larger time frame of silver, but we do have some levels here. We're back up to this level for a second time and likely to go higher. This stuff right here is not likely to cause prices to stall out, but this one is right up in here, and this is the origin of these lows. So watch for that. Okay. And again, if there's any other markets you want to look at, just let me know. Otherwise, I'm going to continue to go through my list. Here's the Swiss. I wasn't really going to spend much time on this. We haven't looked at this in a little while, but yeah, there wasn't really a whole lot to do here, and the chart looks very similar to the euro. The only thing was there was a shorting opportunity here. So let's see how that looks. Just probably not. I guess we can look at it. Just the point here is, if for anybody that trades a Swiss franc, I'm hesitant to even put this in. Watch this area right here. If we do get a rally into here, there's quite a bit of room for prices to come all the way back down into here. So it's a nice trading opportunity. The dollar would have to rally for that to happen. But again, when you look at the larger time frame, there is room for the dollar to rally up to that supply. So I don't want to spend much time on the Swiss. All right, let's look at some equity index markets. We can pull up the treasury markets, but there's not a whole lot to look at here either. Here's the 10-year, and then we'll get over to the equity index markets. All right, so here's where our levels are. The market just keeps touching this thing and rallying higher. But again, we're in this multi-day range. Multi-week really range. So probably best to leave that alone. Instead of just going right to the S&P and NASDAQ, like I think everybody does, and we do all the time too, why don't we look at the DAX? There was a nice opportunity coming up in the DAX. Okay, so I want to point this one out, because I don't think you're going to find this, not a lot of people are looking at this, which is typically why these work. Remember, when everybody jumps into the same trade, you really create the other side of your trade. So that's not ideal. So again, above, and you do your stop up here, and don't forget, the DAX is a big money market. This is not a little small market. So make sure you absolutely know, what the risk is and all that. right? We've got these lows right here. And then we really don't have any significant demand until you really get down here. And we're on a fairly big time frame. Okay. So keep an eye on that. And again, you need your, a nice healthy stop here. And this is not a little level. This is a 4-hour chart. Big, again, big money market. But for those that trade the DAX, this looks like pretty good opportunity. When I say good opportunity, the big part of that is a nice big profit zone. Okay. Yeah, let's look at the New Zealand dollar. This one hit a 4-hour supply zone. I'll show it to you here. Oh, I had my lines in the other day. It's just been sitting up here in this level. So if you're in this position, you just sit tight with it. Okay. Let's go back over here. Oh, I just saw the, let me see here. Oh, I just saw the time. There's my email address. I know we're kind of out of time here, but if you have any questions, if you're struggling to achieve your financial goals, anything like that, just shoot me an email. I'm happy to help. We can touch base. You can send me stuff. Always happy to help. I think we've found some good trading opportunities today. The key with the kind of the theme today, though, is we need patience to wait for prices to get to those key levels. Without waiting for that, your risk is high, and probability, the odds are low. All right. So we'll see you next time. Have a great day, everybody. And again, keep an eye on that dollar. A rally in that dollar, and most of these trades we set up are going to meet entry. All right. Have a great day, everyone.